Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, May 27, 2021. I'll start out with the broad markets, and I'll update. We'll just keep it simple and stick to the trades that I highlighted yesterday, maybe one or two more. Do updates on those, and start out here with the broad market, and I'll keep this update even shorter than the one yesterday because we are at that same exact spot. So for the last several days, we've been running into that what I refer to as a key 334 resistance level, which again was the breakdown here on QQQ a few weeks back, actually earlier in the month, the beginning of the month, and so that's where we're at again. So there's absolutely no change in the technicals, so therefore no reason to spend any more time there. The industrials and the financials remain above trend. I'm waiting to see those guys break down, and they haven't, so we don't have any sell signals in the market yet, but we are at resistance. So you can look at it this way if you want. You can certainly take a shot at a short here. We're not going anywhere lately. It's not going down, but it's not going up. You could always put a stop somewhat above, or just wait until we get those sell signals on the indexes, because that's what's gone on lately. We've gotten just whipsaws on the 60-minute charts of the futures. We had those pretty impulsive breakdowns in the small caps and the S&P 500, but remember, we didn't get it here on the Nasdaq 100. We moved below the trend line, but far from impulsively, and in fact, we've just been hitting that first support level I had there, 13,633. And when you look at the small caps, RTY, like I mentioned, we got a solid breakdown there on the bearish, below the 60-minute bearish rising wedge, and to the button. I mean, that's that level I had before we even broke down when I highlighted that. When we're inside the wedge, then we broke down and hit it to the button, that 2204 support, and rallying from there. So again, not really a lot of opportunities in the markets, and nothing standing out in the charts, and so that's why my focus lately has been on commodities and individual stocks and sectors. So let's dive into those. Let's start out. I'll hit them on the order I covered them recently. I think I had soybeans first. It doesn't really matter, but let's start with the grains. As mentioned this morning, I did an update on ZS and SOYB. Those are soybean futures. Bear with me, I'm looking for it. Okay, there's my chart. This is ZS, and nice move up. So won't spend a lot of time because I did a static chart and update this morning, but there it is. We had multiple opportunities to buy it at support, starting to move up. Little minor resistance right there. I think I guess we're still trading right now. Some of these other futures have stopped trading for the day. I'll get to those in a second. So there's some minor support right there. Again, that previous reaction high, but I still maintain these two price targets. And I already gave you a chart on SOYB this morning. The big movers have been this is in JJG, the grain ETF or ETN, that holds those three. Which is soybeans, corn, and wheat. And so wheat was another one that I highlighted yesterday. And let me find that chart. That is ZW. I've got it here somewhere. There it is. And that's it. So here's ZW. Wheat futures, and WEAT is the ETN that tracks that. Up about 4.25% today, and that's also from where the breakout was. There was a trend line I gave you yesterday. We broke out this morning, and in a single day, nice move, about 4.25%, right up to that 678 target. So you can trade this any way you want. I mentioned, if you're a long-term investor, I made the case that we pulled back to support. There's been a healthy correction, and that would have helped you hone down your re-entry point, and you can hold out for more. If you're a very short-term active trader, you make 4.25% in a day on futures. Since they're leveraged, that puts a pretty penny in your pocket. You can take your profits and run, or trail stops up. And that would be, again, the next target if you're going to hold out for more. So far it looks good. We put in the divergent low breakouts. I think we'll probably work our way up there and then some, but up to you. And like I said, there's many types of traders. Some are active, want to get quick profits, move out, move on to the next one. Others are going for additional targets, and there'll probably be some zigs and zags along the way, including right here. There is a reaction. So far we've stopped at that 678, 330 target. All right, next up. Oh, I didn't mention it yesterday because Well, they're throwing out a lot of trade ideas, and these two they move together, and that's corn. Corn had a similar technical posture as soybeans and wheat, and again, not because they tend to move together. They're both grains, and so when wheat rallied, so did corn. Corn actually even had a bigger move off that divergent low right there, about 10%. But again, moving together, and you can see, what I've had this chart, these levels on here for a while. Let me just update it right there and tell you we may come into some resistance here. There's quite a few reactions. I'll put the line right about there, about where we're at now, 666 and a half or so. But again, story is these guys are in a bull run right now, in a bull trend, and this was a correction that proved proved to be a buying opportunity off these divergent lows. And CORN is the ETN that tracks corn. All right, let me flip over to equities real quick and do an update on AMC, because that has exceeded the any reasonable stop. I mentioned 50% downside target, so therefore to allow about a ideally 15% or so stop, and depending of course if you took it in one's cost basis, so you'd probably been between that $18 and $20 level. That's what I did average in there, and so far we're well beyond that. So that one, 15% stop in the midpoint, if you average in at 19, would have been right there. And again, they took out 20, and looks like unless we get a huge reversal today, they're going to close above 20. But as I said before, that's just going to give us an even larger, or actually give us a divergent high. We didn't have it yesterday because we didn't take out that previous high right there. That's part of divergence. Prices need to be making the higher high with the indicators making a lower high. And so you have it, and there's some long-term levels, 36. Is the next big resistance on that one. And again, the fundamental case doesn't warrant this. It's the Reddit crowd all jumping in at the same time. And so I still maintain that target, that down to about the $9 level. And what you need to see at this point, since you're in an uptrend without any sell signals and you've taken out resistance, that was an objective short. Didn't pan out, but it was objective. The next objective short will need to see some type of reversal pattern, ideally a candlestick, some type of candlestick reversal pattern that gives us a good inclination that the run is over. So just wanted to update that one. Next up was the US dollar. We hit resistance. We're at that downtrend line, the larger primary downtrend line. Let me give you an update on that. DX, dollar futures is, got it down here somewhere. There it is. And this is what dollar futures look like, DX. And of course you can trade UUP, the dollar ETN, or you can short the euro. But we're right at the primary downtrend line, the thicker downtrend line. Remember yesterday we took out this minor downtrend line right here, and the case was made to step in and buy it at support with a stop somewhat below. So that's it. We just basically keep it very simple. We need to take out today's highs, and that'll take out the downtrend line, and that should open the door up to my price targets here. And HG, I also posted an update on this one this morning. This morning we had hit earlier today my 6260-ish target right there, and then we took that out, and now we're at or just a hair above the downtrend line. Really a potential downtrend line, because we'll need to get a reaction here to give me that third confirming reaction to help validate the trend line. Otherwise there could be more upside. So again, quick traders could that was, what did we put it on, Tuesday or Monday? We got the breakout and I shared the setup, and so quick pop up. Active traders consider taking profits there, or again, at least trailing stops if you want to let it ride, if you think there's more upside on it. And crude, really not much of a change since yesterday. I've been highlighting crude here at this level, about 66.63, including that last time there, providing an objective shorting up. So the only thing that's changed since yesterday is we had divergence here. Now we've extended it. As I said, another thrust up, even a relatively brief thrust above that, if that should occur with a move back down, will anytime soon at least just extend the negative divergence that's down in place. So same story. You have the Nasdaq 100 at resistance. You have crude oil at resistance. So objective to take a shot at a short trade with a stop somewhat above, and this time around I'm still looking for that move down to at least that 60-63 target, which we never hit after this drop. We're just back to where we started. After coming pretty darn close. It was a nice drop down there. That was about a 7.8% drop. So there's also the benefit to be said about in a trade trailing stops down, either periodically ratcheting your stops down as a trade pans out, on a short trade, and if you're in a long trade, you ratchet your stops up. Or you can always set trailing stops. And the tough part is, how much do you trail? Well, you need to know your security, and you need to know what are the typical counter trend rallies within that security, because everything's different. Every security is different. Natural gas, for example, is extremely volatile. You need to give it more room, or you're going to get stopped out in the noise, the back and forth, whereas some other securities are a lot less volatile, and so you can use a little bit tighter stops there. And then finally, Beyond Meat. Somebody had mentioned in the comment section under one of the recent posts that this fake meat company has been rallying more so than a lot of the actual commodities. But here's the thing about it. These levels, I've had this line on this chart forever. This was created back in 2019. We've had some really nice trades on Beyond Meat, including a big, some shorts back here. We had a big bearish rising wedge. We had a little bullish falling wedge here, at least a divergent low and a trend line breakout. But what stood out, and I posted a chart if you want to check it out. I'll just show you what I posted in that chart. Look at the RSI. Look where we're at. We're just at the overbought level there, about the 70, the red line. And I'm going to circle every other time that this stock has become overbought. There's a series of 3 consecutive overbought readings there. One there, one there, and one there. Now let's look what happened each and every time we were overbought. We had this drop. May not look like much, but it was a drop of about 30%. Then we had this drop. This was the next time we became overbought. And before all said and done, well, let's just count it down to right here. That was about a 70% drop. So you get the point. Overbought on this security. The stock has a history of not staying there very long and then correcting. And again, I just circled 1, 2, 3 right here. Close taps, and again they were all tradable for a correction. Now overbought, the only problem, it can become more overbought, so it's not the sole reason you're short a stock. Last time was right here, but we're also at resistance, and we're a little higher this morning when I posted that chart. So it's an objective shot to take a short there based on the fact that it's overbought and rallying into resistance. And if it can pop this, the next stop, my next resistance level, and again, I've had it here for a while. It's a pretty big one. It was 163.24, but I don't know what the news is or if they reported earnings or anything like that. I don't know what caused the pop today, but it's still up about 12%. Just wanted to share that one with you, and it's like everything else. You take a shot depending on your target. The history of pullbacks, the drops have been larger, but at minimum, I'd expect to pull back to that 120, 164 level should this 143.50 cap it. And of course, you had a little bit of momentum fueled overshoots. You went above it today, and again, we were right about there at the time. I took that screenshot earlier today and posted it in the comment section. And that's about it. We'll keep this video short. I'm at the just under the 14-minute mark, and I'm just looping back to the NQs, Nasdaq 100 futures. And so, again, it's not an impulsive sell signal. It's not what I like to see. It's not really a confirming sell signal, but we are below the trend line there. And the key is we've been moving sideways recently, and this is an area of consolidation. So, when you get areas of consolidation, here was a much bigger one. You look for breaks, and that's why we had a sell signal. Oops, that's not an arrow right there. This is a smaller one, and so if you're wanting to get short or you want to go long, I'm not crazy about the long side here. Why? Because of the divergence. Divergent highs often will result in a trend change, correction. just like divergent lows often result in a trend change, meaning a rally. So that's where we're at, and that's my expectation is downside break of that, and again that would provide an objective short. And as I like to say, the redder the better. You want to see impulsive, selling just like you did there. That is confirmation 100% on that breakdown, that kind of big red impulsive move drop right there. So we'll look for something similar here, and I'm going to wrap the video up. This has been Randy Finney with Right Side of the Chart. Have a great day.